Hey guys, welcome back. And today, kind of new chapter, and we're gonna talk about entries. So it's important for you to have an exchange. If you don't have it, join the ecosystem. There is the video. There is even on YouTube the video where I'm showing how to set up your exchange. But in this chapter, we're gonna talk about more entry points, more stop losses, take profits, the whole psychology from that angle, to enter the trade and make money. So let's get into the chart. I'm always talking about how you should enter the trade. There's supposed to be a confirmation. Where is your entry points? Where to put the stop loss, which is logical, and where to put your take profit, or what kind of the risk reward you're supposed to do, you're supposed to take. We're gonna try to look into that because you have a normal entry point. It's important. This is part of the strategy. There's gonna be the academy. You can join there. I'm gonna teach you my own edge. I'm gonna teach you that. And the point basically of this, that you have to know where to enter, where to put the stop loss, and of course, where to put the take profit. You have a market, yeah? Market is moving like that. We talked about that support and resistance zones, yeah? For example, you can enter some trades from the support and resistance levels, which is normal. When the price starts pushing down, you're entering the price, putting your stop loss, for example, above your resistance level and targeting the support level. This is one of the common sense, how you're entering the trade, how you're looking for that. Also, we talked about also about the fair value gaps, about the liquidities, how liquidity is taken out, where we can enter after that. You have a lot of points. What you have to do is just look for those videos again. For example, here we have our entry point. We know that if we are looking for the long position, we are entering from the fair value gap stop, yeah, putting our stop loss below. And our take profit is, for example, looking for another liquidity, which is going to be from the top. But for that, you need clear rules. You have to create your own rules or use what all of the traders are using. The first one is you need to have a clear entry point. Where are you going? When are you entering? Why are you entering? So this is the clear entry point means. And there are several examples where you're putting your limit orders on the fair value gap. Yeah, when the price coming back at the top of the fair value gap, you're entering the trade. Yeah, so for example, limit orders with fair value gaps. Another entry point can be after the candles close, you can enter the trade and you know where to put your stop loss, which is gonna be below. But here you're going with the day trading, you're going with the confirmations, you're not going with the scalps. So you're entering when the candle closes. And in this case, there is much more confirmation in that. When the candle closes, you can enter the trade, you can see some entry points, and this is how you enter. Another point can be with the candlestick patterns. We talked about that. Once again, you can look a video there, back there. There is a bunch of videos. You're entering after those. For example, you can see your demand zone. After that, you can see your pattern formed, and you're entering the trade, you're putting your stop loss and your entry point. So those kind of the things you need to figure out with the way you trade. We're gonna talk about that. We're gonna come to some real examples. Let's go there. But what I'm telling you, you need to start trading. And after that, little by little, brick by brick, you're building your own edge. You have to find the right strategy, which is working and where you can make money. So now let's go to the charts, and we talked a lot about entry points, about, for example, in this case here, we have inverse fair value gap, yeah? The price entered here above our EMA 100, and after that started pushing down. You see, such a big movement, and it's taken out all of this future buyers. Yeah, you're entering the trade, you know that you're entering after your inverse fair value gap is going all the way down, so after the candle, for example, you can enter there. Yeah, putting your stop loss, putting your take profit here. Okay, I would say 1 to 2 would be enough in this situation, and you have an amazing trade. Another kind of the scenario, the same situation. Yeah, it was within fair value gap. Now we are looking, for example, with the fair value gap, which was formed here. And yeah, if you want to be precise, maybe, yeah. Look at this highest price, 65,505, and this one 65,511. So you kind of have your entry point here because the price created a fair value gap. Yeah, you can see here. And the price touched that a little bit, but you know, different strategies. Yeah, once again, you're entering the trade, you're entering your here, you're putting your stop loss above the VIX, where your information is not working, there you're putting your stop loss, and then you're targeting something. For example, this liquidity grab. Now in this case scenario, this 1 to 2.6 risk reward, which is amazing and better entry, you know. That's why you're testing different entry strategies and looking which you like more. You get my point? So that's basically the entry points, and about the stop loss we're going to talk about later. But the point is, you have to have trading strategy. We're gonna have here after the bootcamp, I'm gonna share some. There's gonna be some indicators, there's gonna be some technical analysis. You're gonna see that, you're gonna see some examples, so maybe you're gonna like that. You never know. So yeah guys, thank you so much for watching, and see you in the next episode.